So in this video, we are going to cover the financial management paper of December 2019 for CS Executive New Syllabus. There are total 60 questions that were asked from financial management. We are going to discuss each and every question along with the relevant concept for a quick revision, which will not just help you to go through the entire paper thoroughly, but also help you to brush up the concepts which were related to all those questions. So without any delay, let's start with the question number 1. So in question number 1, we have which of the following is true regarding the financial decisions of the firm. So there are three financial decisions which a firm has to make or a finance manager has to make. What are those three decisions? Financial decisions. One is financing decision, right? Which means from where the funds will be procured. कहाँ से पैसा आएगा, right? This is going to be the first decision. Then once the money is procured, then where the money should be invested. एक बार पैसा जा आ गया, उसके बाद ये पैसा हम कहाँ पर लगाएंगे. That's the investment decision. And then we have the dividend decision कि पैसा लगा दिया, profit earn कर लिया है. Now how this profit should be distributed, or whether or not the profit should be distributed or not. Now based on the investment decision, we take the financing decision. Whatever way, the whatever investment opportunities we have, what is the relevant return? Based on that, we try to find out which is going to be the apt cost of capital. We find out the cost of capital, and that's how we get to know that which is going to be the best source of capital. Now again, the dividend decision depends on these two decisions, because if the company has generated huge profit, then the company should distribute the dividend or not. That will depend on whether the company has any investment opportunities or not. And if the investment opportunity is there, what are the various sources of finance that are available here? Like for example, Airtel did not distribute dividend for initial 8 to 10 years after getting listed because it had to buy multiple telecom licenses. So no dividend was distributed there. So this is how it works, and all the three decisions are connected. So if we just see the options, we have investment decisions are dependent on financing decision. Financing are dependent on dividend. Dividend is dependent on investment decisions. And the correct answer would be all the three decisions
All
are,
three.
yes, all three are interrelated here. Then we have this next question. This was a very easy question which was asked. So what will be the maturity value? So maturity value means they are asking you about the A for a sum of rupees 18,000, which is invested today at the rate of 5% per annum for 10 years. So here it becomes A is equal to P into 1 plus R to the power N. So we know this is 18,000, right? Now 1 plus R is 5%, 0.05, और N हो जाएगा आपके पास 10 years. So now when you solve this, so आपका कुछ आंसर आएगा 29,320.10, which means C is the correct answer. How to solve this in calculator? You do 18,000 into 1.05 and then into equal to you're gonna get that answer if you do it 10 times, या फिर 10 times आप 1.05 को multiply करो with 18,000, so you get that answer here. Easy. Then next question we have, the competing objectives of financial management have been. So the two objectives of financial management or a finance manager would be, earlier it was only profit maximization, and now it is wealth maximization as well. So the correct answer is option A, profit maximization and the wealth maximization. Then we have which of the following is the example of systematic risk in the stock. Now, when we talk about systematic risk is the one which does not impact a particular business. It has a large impact. This has a impact on the industry, entire industry. This systematic risk is also called as the risk which cannot be controlled, right? So this is uncontrollable risk. Then this risk is the one which cannot be diversified. So this is undiversifiable risk. So why I'm telling you all these words, because in exam you never know what kind of question you may get. Then this is the risk which is unpredictable. Okay. Now when we talk about the options here, so company strike is going to impact the company, but we have this industrial recession. So industrial recession is one which is going to impact the entire industry. So this is going to be the correct answer for question number 4. Then we have treasury bills. Treasury bills are issued by. So treasury bills are the government securities. These are the risk-free securities, right? Treasury bills or the T bills. They are the government securities. These are the risk-free securities,
CG.
right? CG. And in fact, the return on treasury bill is also considered as the risk-free return. Okay. Now, treasury bills are issued by the central government, and RBI does this. RBI issues treasury bill on behalf of the central government. So the correct answer would be central government, right? Then we have question number 6. So this says that calculate the effective rate of interest, or given that the effective rate of interest is 9.31% per annum, what is the nominal rate of interest per annum if the compounding is carried out quarterly? So the entire basis of this question is again based on the compound interest formula. So A is equal to P into 1 plus R. Now since this is compounded quarterly, okay, since this is compounded quarterly, so R would be divided by 4 and N will be multiplied by 4. Here N will be 1. Now if we see, if you invest 1 rupee at the rate R%, which is getting compounded quarterly, okay, this becomes 1.0931. That's how we say that the rate of interest, effective rate of interest is 9.31%. Now what we have to do is we have to find out R. So the best way would be equate this equation and then solve this equation and then find out the value of R. So how we can do that? Now we know this is to the power 4. So 1.0931 अगर हम इसको 1 by 4 कर दें, so we can get, और ये आ जाएगा फिर 1 plus R divided by 4. Now how to get this? इसको दो बार root कर दो. 1.0931, just root it twice in the calculator. So 1.0931 two times अगर इसको root कर दो, so this becomes 1.0225, which is equal to 1 plus R divided by 4. Now R is equal to 1.0225 minus 1 into 4, which brings up to 9%. 0.225 into 4 is 0.09, which is what? Which is 9%. So the correct answer is going to be 9% here. Then we have decisions related to mix of debt and equity in the balance sheet. Best relates to which of the following? So in which of the chapter you have studied what portion should be equity, what portion should be capital? It is the capital structure. It is the capital structure decision where we decide what is going to be the optimum capital structure where our earnings per share or the market price per share is going to be maximum. So this is the capital structure, the correct answer. Now, when we discuss the option here, we also have capital budgeting. So which decision would be capital budgeting? Capital budgeting would be investment decision. This is the investment decision. Then we have this chapter, cost of capital, right? Cost of capital is what? Cost of capital is your financing decision. Cost of capital is the financing decision, and capital structure is extension of this financing decision. Step 1, we find out the cost of capital, and then step 2, we find out what should be the ratio of debt is to equity is to preference in our capital structure. So as of question number 7, this is the correct answer. Then question number 8, which of the following are not applicable in case of payback period calculation of investment appraisal? So payback period calculation. Now, when we talk about payback period, what does payback period means? Payback period means during or within how many times or how many days, how many years our initial investment will be recovered. So if I have invested, let's say 1000 rupees in a project, which is going to give me a profit of or a initial cash flow of or a subsequent cash flow of 250 rupees for another 6 years. So I would say my payback period is what? My payback period is 4 years. Sorry. So I would say my payback period is what? My payback period is 4 years, because 250 rupees I am going to receive for 6 years, but within 4 years, my or at the end of the 4 years, my 1000 rupees initial investment will get recovered. Therefore, this is the payback period calculation. Now, there is one drawback or there is one limitation in case of payback period. And the payback period has this limitation that whatever outflow I'm going to make, this is going to be made in year zero. At the end of year one, I'm going to get 250, and same way at the end of year two, year three, year 4, year 5, and year 6. Now the problem is 250, this 1000 rupee is worth 1000 rupee. But this 250 rupee will not be worth 250 rupees due to the concept of time value of money. This 250 rupees will be valued little less as compared to 250 rupees. So it can be, let's say, 245 rupees depending on the discount rate. Then this will further depreciate. This is going to further depreciate. This is going to further depreciate. So what I'll realize that how we calculated payback period taking into consideration 250, and we said that our investment is going to recover in 4 years. Now when we apply the concept of time value of money, it is definitely going to go beyond 4 years. So in case of normal payback period, what is the major drawback? The major drawback is that it does not consider the time value of money. So that's what the question was, that which of the following are not applicable. Not applicable is this, that time value of money. It does not consider the time value of money. So, and that's the reason we have this discounted payback period, which takes into consideration the concept of time value of money. So this was the question. Then we have question number 9, and question number 9 states that the security market line shows the relationship between. Now, when we talk about security market line is a graph, and this graph on the x-axis we have beta, right? Beta is what? Beta is also called as the risk. Beta is also called as the sensitivity of the stock, right? And on the other hand, we have expected return. We have expected return. Now when we talk about here at this place, risk is 0, and this is the risk free return. And as and when we go ahead, as and when we go ahead, the risk increases and the expected return also increases. This area, if any stock falls in this area, it is that the stock, it signifies that the stock is undervalued. And if any stock falls here, then we say the stock is overvalued as compared to the risk and return. So the security market line shows the relationship between, it shows the relationship between the expected rate of return and the beta, right? Then we have, yeah,
So this is basically risk to reward ratio then, right?
yes, yes, risk to reward, but expected rate of return.
And not actual.
Yes, not actual, not actual. This is expected, right? And based on the actual return, we'll calculate whether there was a gain or there was a loss. Then we have question number 10, and it says that the cost of retained earning is equal to. So the cost of retained earning is equal to. Now, when we talk about retained earnings forms the part of the funding by equity shareholder only, right? The equity shareholder, they make a return, which return should be distributed to the equity shareholders as a dividend, but that is not distributed as dividend, and that is retained in the reserves. So the reserves or the retained earnings, they belong to whom? They all belong to equity shareholders. Now, just like A equity shareholder, while purchasing the shares of the company, expects a return on the share, which is called as cost of equity. The same return would be expected by the shareholder on these reserves, on these retained earnings. Therefore, the cost of equity will always be equal to the cost of retained earning. Only difference, when you are going to calculate the cost of equity of a new share, when you will calculate the cost of equity of a new share, it is then when we will say the cost of equity would be greater than the cost of retained earning. First point. And then second point, what we have to discuss here is that how do we calculate the cost of equity? So cost of equity can be calculated by multiple methods. And if we go by the options, since we have to get the right answer amongst these four, so cost of retained earning is equal to dividend payout ratio. Answer is wrong. Cost of equity is equal to the rate of return expected on the equity share. So this seems to be a correct answer here. Then we have risk-free return, absolutely not. Dividend yield ratio, absolutely not. So option B is the correct answer, and this is the logic that the reserves or the retained earnings also belong to the equity shareholders. So whatever the equity shareholder expect on their equity share, the same they are going to expect it on the retained earnings on the reserves. Then we have decision rule based on the benefit cost ratio or the net benefit cost ratio. So what does this mean? Basically, this is your profitability index, what you have studied in capital budgeting. And in case of profitability index, how we used to calculate PI, we will take the present value of cash inflow on numerator and present value of cash outflow in the denominator. And if the PI index is equal to 1, in that case, we are neutral. Accept, reject, there is no problem. But if the PI index is greater than 1, then we say we should accept the project. And if there are two projects and we have to select any one of them, then the one having a higher profitability index would be accepted. Then if the profitability index is less than 1, then we reject the project. Okay. Now, what does this mean? What does profitability index show? Profitability index shows that if you have invested 1 rupee in a project, and I say the profitability index of that particular project is, let's say, 1.85. This means every 1 rupee invested in the project would become 1 rupees 85 paisa. So that's the reason we are going to accept the project. But if the profitability index of a particular business is 0.90, this means every 1 rupee invested in the project would become 90 paisa, and we are going to reject the project. So this is the concept of profitability index here. Now, if we see the options, so if the BCR is less than 1, then it says that accept the project. Answer is wrong. In case of 0, we are neutral. So accept and reject does not arise. So correct answer, even by elimination method, goes option D. And what is written here? It says that if the BCR ratio is less than 1, we should reject the project. Absolutely. This is where we take the decision, right? Now, next question that we have is that equity share with beta greater than unity would be called as. Okay. Now, what do you mean by beta? This is the symbol for beta. Beta is called as the sensitivity of the stock. Beta is called as the sensitivity of the stock, and sensitivity of the stock as compared to or with respect to market. So if I say that beta of particular stock is 1, this implies that the risk in the stock, okay, the risk of the stock is equal to the risk in the market, which means that if the market increases by 10%, the stock will also increase by 10%. And the vice versa is also true, that if the market falls down by 10%, the stock value will also go down by 10%. So this is when they say beta is equal to 1. If we say beta is greater than 1, now in this case, the risk in the stock is greater. The risk in the stock would be greater than the risk in the market. And how do we calculate this? So let's say if I say beta is, for example, it is 1.5, which means if the market increases by 10%, the stock will increase by 15%. That is 1.5 times. So you would say, sir, it is good. But the opposite is also true, that if the market falls down by 10%, then the risk or the security also goes down by 15%. So it is going to react 1.5 times than what the market is going to react. And then if beta is less than 1, right? For example, let's say the beta is 0.80. So here the risk in the security is less as compared to the risk in the market. And again, if you go by the same example which we have covered before, if the market increases by 10%, the stock increases by 8%. That's zero point 0.8 times. But if the market goes down by 10%, then in that case, the stock goes down only 10%. It does not go down to 10% or more than 10%. And that is the reason the stock which is having greater beta, this is called as aggressive stock. And the stock which has a beta less than 1, this is called as the defensive stock. Now let's see the options which we have. And in this question we have beta greater than unity. This means we are talking about beta greater than 1. So beta greater than 1 cannot be a defensive stock, so these two options are eliminated. Now it says that the beta greater than 1 would be called as the aggressive stock. Now, why this will be called as aggressive stock? Because it is expected to increase more than the market increase. Correct. So this is the correct answer here. And it is aggressive stock, but is expected to decrease more than the market increase. So here it is wrong. If the word increase is replaced with decrease, then option D would be the correct answer. But otherwise, as of now in this question, option B is the correct answer, because market and risk both are going to market and the stock are going to be in the same direction, and that's what beta has been calculated here. Now next we have question number 13, which is an interest rate that has been annualized using compound interest is termed as. Now this same question we did, the practical question we did just before, it is called as the effective annual interest rate. And how do we calculate? This is also called as EAR, effective annual interest rate. So how do we calculate effective annual interest rate? This is 1 plus the normal rate of interest. This is the formula I'm telling you, formal normal rate of interest divided by the number of compounding period. If you remember, well, we did compounding quarterly, we had divided it by 4. So this is the number of compounding period to the power n. This whole would be to the power n minus 1. So this is your effective annualized interest rate. Okay. Now next we have risk aversion of an investor can be measured by. Now, this can be measured by the difference between the market rate of return and the risk-free return. Now, what is the logic behind this concept? I'll tell you. So there is this concept which was given by Harry Markowitz, which is called as efficient frontier. So there is a concept of efficient frontier, right? Now, in case of efficient frontier, again, we will have a graph which is going to discuss this concept. On the x-axis, we are going to have the portfolio risk. We'll have the portfolio risk. And on the y, we are going to have the expected return of the portfolio. The expected return of the portfolio. Right. Now it goes something like this. The graph is made something like this. This point is called as A. And then we have a graph like this. So we have B here and we have C. Now, when we move from A to B, this indicates that portfolio is having a higher yield and also a higher risk. You see, when we go there, the portfolio is having a higher risk. So from here to here, if we go, so your risk is also increasing, okay, and your returns are also increasing. But if we go from A to C, this is inefficient because your risk increases but your yield goes down, right? So if you go from A to B, this indicates higher yield with higher risk. So this is higher yield with higher risk. But if we go from A to C, this is what? This is lower yield with higher risk. This is lower yield with higher risk. So this is the difference between the market rate of return and the risk-free return. This is the correct answer here. Now, this is also called as inefficient, right? This is again inefficiency here, right? Now, and what does A signifies? A signifies minimum risk and expected return. So in case of point A, here there is minimum risk with respect to the expected return. Okay. Then we have question number 15, and it says that if a firm has declared 25% dividend on the share of face value of rupees 10, its growth rate is expected to 5%, the rate of capitalization is 12%. What would be the expected price? Now we know that since there is growth, we are going to use the Gordon model. Okay. And as per Gordon model, it is P0 is equal to D0 1 plus G, or we say D1 upon KE minus G. Now, what is dividend equal to? So dividend is 25% on the face value. So D is equal to D0 is equal to 25%. Dividend is always declared on the face value. So we say that 25%. So 25% would be on the face value. So 25% of rupees 10, which is 2.50. Now growth we have, this is 5%. So this is 0.05%. KE we have, that is the rate of capitalization, which is 12%. Now if we put all this in the formula, what price we are going to get? You see, this is 2.50, 1 plus 0.05 divided by 12% minus 5%. So the correct answer would be 2.5 into 5% divided by 7%. So this is 37.5. 37.5. So ये आपका correct answer आ गया 37.5. Make sense? Right? Then we have capital budgeting decisions are the part and parcel of which decision? So capital budgeting decisions are the part and parcel of the investing decision. It is only and only the investing decision. Just now we discussed some time back. Then we have diversification can eliminate the risk if the securities of the portfolio are. Now, what we mean by diversification? So, or eliminating the risk by diversification. So take for example, I have a company which imports, okay, I have a company which imports goods from US or from the foreign market. So let's say I have a oil company, or let's say I have ONGC in my portfolio. And then I have a company which exports. So let's say I have TCS in my portfolio. Now, when I say $1 is equal to rupees 70, what is going to happen if the dollar increases? Okay, the rupee depreciates, dollar increases to 80 rupees. Now, in this case, ONGC is going to have a loss. ONGC's bill is going to rise. So ONGC is going to incur loss. So the share prices are going to fall. But on the other hand, if you see TCS, TCS is going to make gain. Why? Because now their revenue is going to increase. On the other hand, if the dollar depreciates and it goes to 60 rupees, the opposite situation would be there. But what if I had ONGC and let's say Bharat Petroleum, both these companies in my portfolio, then in this scenario, I will have heavy loss, and in this scenario, I will have heavy gain. Same way, if let's say apart from TCS, I have Wipro in my portfolio, that's another exporter company. In this scenario, I will have surplus, and here I am going to make losses. So, why this helps? Because these two stocks are negatively correlated. What do you mean by negatively correlated? To a particular change, one stock is going to react positively, and to the same event, the other stock is going to react negatively. Okay, so these are perfectly negatively correlated, right? So if both the, so we have this calculation, that is coefficient of correlation RAB, where we say covariance AB divided by standard deviation A, standard deviation B. If the answer to this is positive, this means they move in the same direction. They move in the same direction, which this means we have ONGC and Bharat Petroleum in our portfolio. But if this comes out to negative, then it is they move in the opposite direction. They move in the opposite direction. This means we have ONGC and TCS in our portfolio. So when these two are perfectly negatively correlated, then in that case, we say that the diversification of the risk will be there. Okay. So positively correlated, the risk is going to be increased. Negatively correlated, the risk is going to get eliminated, because to a particular change, one stock is going to have positive impact and the other is going to have a negative impact here. Next, we have a question. Dash is the present value of an asset if the annual cash flow is 1000 for the next 5 years and the discount rate is 15%. So this is a simple question. You do it in the calculator. 1000 rupees divided by 1.15, right? So this is going to be to the power 1, then 1000 upon 1.15 to the power 2. So this way 1000 upon 1.15 to the power 5 you have to calculate. Now how you are going to do it in the calculator? You write 1000 divided with 1.15 equal to, so you're going to get an answer 1000 divided by 1.15, you're going to get 869 point something something. So now you do m plus. Now again you press equal to. Now you are going to get 756 m plus. Then again you need to press equal to. Now you are going to get 657. Again you do m plus. Then again equal to. You are going to get 571 m plus. Then divide equal to. Sorry, just you are going to press equal to. So this is 497. And again you are going to press m plus. So since the n is 5 years, so 5 times we do. And now when we do MRC, right? So we are going to get a value near to 3,352 rupees. Or if individually also you add 869 plus 756 plus 657 plus 571 plus 497. So this is 3,350. The nearest answer is this. Okay. Then we have another question. Question number 19. An investor purchases a bond which is giving 8% return, 8% bond having face value of 1000 and the maturity of 5 years for 900. Okay. A year later, he sells it for 960. What is going to be the holding period return? So how do we calculate holding period return? Holding period return is going to be your selling price, right? The sale realization minus the acquisition price, or that is the cost price, plus whatever return you have received, the interest and all, that divided by your acquisition price into 100, and this is going to be 12 upon n, the number of months. But here we don't require this because again, here it is being sold after 1 year. So even if you write 12, it is going to be 1 only. So the investor sells it for 960 rupees, which was acquired for 900 rupees. And during the year, it has also received interest at the rate 8% on this 1000. So 80 rupees interest on an investment of 900 into 100. If you write 12, so since it is 1 year, so it is 12 months. So this has got no impact. So the total becomes 140 divided by 900 into 100. So the return is 15.55%. So the correct answer is option number D, right? Then we have another question, the effective rate of interest. So this is the third time we are getting the question on effective rate of interest. So the effective rate of interest for a sum of money compounded quarterly is 12.55. Now, can you calculate this question? Can you calculate this question? Now, again, the same thing. 1 rupee is invested
Yes,
at the
sir.
rate R%, which is compounded quarterly. This is 4, and this becomes what? 1.1255. And we have to solve this. So basically, 1.1255 to the power 1 by 4 is equal to 1 plus R upon 4. 2 times if we root 1.1255, 1.1255, if we root it 2 times, so we get 1.0299 is equal to, or we can straight away now solve it, minus 1 into 4. So this is going to be R. So this minus 1 into 4. So this comes out to 11.99%. So the correct
12%.
answer will be 12. So the correct answer would be 12, right? Now, moving ahead, next question that we have, the price of a share, rupees 100, it grows 125 rupees at the end of first year, then 187 at the end of second year, and 243 at the end of third year. So what is the average return? So we need to calculate the holding period return for every year, and then we are going to take the average of that. So if you pick up first year, so first year closing price is 125, the opening price was 100. So upon 100, so
$25.
here the return is 25%. Then we have year 2, and in year 2 we have this 187.5 minus 125 upon 125. So next year the return is 50%, and in year 3 we have 243.75 minus 187.5 divided by 187.5. So this is not the percentage sign. So here we get a return of 30%. And now we are going to take an average of this. This is going to be 25 plus 50 plus 30 divided by 3. So the average comes out to 35%. Option number B. Okay. Then we have another question which says that what is the present value of the annuity which is starting 15,000 immediately and paying another 5 installments. Assume the discount rate is 12%. Now this I would say is a good question, and there is a catch to this. Normally when we calculate the present value, we start the inflows or the outflows from year 1, right? The inflows starts from year 1, but here the problem is in the year 0 itself, right? In the year 0 itself, 15,000 is made. Then there are 5 more installments. So year 1, 15,000. Then we have year 2, 15,000. Then we have year 3, 15,000. Then we have year 4, 15,000. And then we have year 5, 15,000. And we have to calculate the present value for all these. So For the present value of this, the answer would be 15,000 only. However, for these, the present value will be different. So this will be 1.12 to the power 1, 1.12 to the power 2, 1.12 to the power 3, 1.12 to the power 4, 1.12 to the power 5. Otherwise, the same m plus approach you can utilize. You can use those m plus approach again and you can solve. So 15,000 divided by 1.12. So here you are going to get a value of 13,392. इसको m plus कर दो, then again equal to press करोगे तो equal to press करने पे आपको value मिलेगा 11,957. Again m plus, then again equal to, if you are going to press, you are going to get a value of 10,676. Again m plus, and then equal to, so you're going to get a value of 9,532. M plus, then again divide, oh sorry, equal to, you're going to get here 8511. अगेन m प्लस कर दो, और अब अगर आप MRC प्रेस करोगे उसमें 15,000 को आप यहाँ पर ऐड कर दोगे तो यू आर गोइंग टू गेट द आंसर हियर. सो since my calculator is little different, so I'll have to do it individually.
सर ये
392.
हर कैलकुलेटर में नहीं होता शायद.
यस, कुछ कुछ कैलकुलेटर्स में, जैसे मेरे वाले में इक्वल टू वाला फंक्शन नहीं आता, एंड दैट इज द रीजन.
हाँ
जब मैं,
मेरे इसमें भी नहीं है.
इसीलिए मैं यहाँ पे जब डिवाइड इक्वल टू मेरे मुंह से इसलिए निकल जाता है बिकॉज आई हैव टू डिवाइड 1.12, राइट. सो इफ यू जस्ट ऐड इट, 957, 10,676, 9532 and 8511. So we get the correct answer 69,068 rupees, right? और इसमें फिर हम 15,000 को यहाँ पर ऐड कर देंगे तो हमारे पास ऑप्शन नंबर यहाँ पे करेक्ट आंसर आ जाएगा. ओके, इन दिस, इसमें से एक भी आपका आंसर करेक्ट नहीं है. इसमें से एक भी आंसर आपका करेक्ट नहीं है. करेक्ट आंसर आपका इस क्वेश्चन में आता है 69,000 के करीब. सो दिस इज 15,000 प्लस 13,392 plus 11,957 plus 10,676 plus 9,532 plus 8,511. Yes, so the correct answer comes here is 69,068 rupees, and depending upon decimals में आपने कितना लिया है, but this is going to be the answer. ये 65 से 75 के बीच में कहीं पर भी जा सकता है, right? So this is the correct answer. इनमें से एक भी आंसर आपका यहाँ पे करेक्ट नहीं है. Then let's go ahead. Which of the following do not contribute to the systematic risk? अब आप मुझे इसका आंसर कर सकते हो, कमेंट सेक्शन पे इसका आंसर आप अटेम्प्ट कर सकते हो कि which of the following will not contribute to the systematic risk. Not contribute पूछा है, not contribute. इनमें
न्यू
से एक,
कॉम्पिटिटर.
न्यू कॉम्पिटिटर, इनमें से एक ऑप्शन अपना, ये कॉम्पिटिटर वाला ऑप्शन लास्ट टाइम भी था, राइट. सो दिस इज देयर. नेक्स्ट वी हैव Varun Limited is issuing 1,12% irredeemable preference shares of a face value rupees 100 each. It has a flotation cost of rupees 2 per share. What is the cost of preference share? तो आप देखो, अगर irredeemable preference share है तो irredeemable preference share का cost of preference निकलता है preference dividend divided by नेट प्रोसीड्स. नाउ व्हाट इज नेट प्रोसीड्स? आप कितने में अपने शेयर को इशू करते हो, दैट इज द इशू प्राइस, और उसमें से फिर हम डिडक्ट कर देंगे फ्लोटेशन कॉस्ट. ठीक है, हम फ्लोटेशन कॉस्ट को यहाँ पर डिडक्ट कर देंगे. और प्रेफरेंस डिविडेंड कैसे निकलेगा? आपका रेट ऑफ डिविडेंड इनटू द फेस वैल्यू. सो आप यहाँ पे 100 रुपीज का प्रेफरेंस शेयर इशू कर रहे हो और उसके ऊपर 12% का प्रेफरेंस डिविडेंड दोगे. सो दिस इज गोइंग टू बी 12. और यहाँ पे आप 100 रुपीज का प्रेफरेंस शेयर इशू कर रहे हो जिसके ऊपर 2 रुपीज का आपको फ्लोटेशन कॉस्ट है. सो दिस इज गोइंग टू बी 98. सो 12 divided by 98 is 12.24%. So option C is the correct answer. थोड़ा सा यहाँ पे परेशानी हो सकता है इन केस आपका आंसर यहाँ पे आसपास में नहीं. और कई बार देखना ऐसे ऑप्शंस में क्या होता है, जल्दीबाजी में आप, जैसे 3 4 हो गया, 1 4 हो गया, यू मे मार्क अ रॉन्ग आंसर देयर, मतलब आपका कैलकुलेटर पे आंसर करेक्ट आया, 12.24 ही आया, बट हो सकता है आप जल्दीबाजी में यहाँ पर मिस्टेक कर दो, सो बी वेरी वेरी केयरफुल इन सच क्वेश्चंस. Then we have question number 25. It says that if an investment of rupees 3 lakh pays 25,000 per annum perpetuity, okay, what is the net present value if the interest rate is 9%? Now it is asking you NPV. So NPV कैसे calculate करते हैं? NPV होता है आपका present value of cash inflow minus present value of cash outflow. Now when we talk about present value of cash outflow, ये अपने को पता है it is 3 लाख रुपीस, क्योंकि यहाँ पर आपका इन्वेस्टमेंट 3 लाख रुपीस का जा रहा है. Now when we have to calculate the present value of cash inflow, so 25,000 you are going to get perpetuity, मतलब infinite years तक आपको मिलेगा, and there is no growth in that. And the rate of interest, that is the discount rate is 9%. So जब भी कोई cash flow infinite years तक arise होता है, present value of such cash flow is the future value of the cash flow divided by the discount rate. करेक्ट. जैसे हम एक इररिडीमेबल इक्विटी शेयर विथ नो ग्रोथ का वैल्यू निकालते हैं, ये बिल्कुल वैसा ही हो जाएगा आपका, राइट. इररिडीमेबल इक्विटी शेयर मींस इक्विटी शेयर विथ जीरो ग्रोथ, उसका हम जब वैल्यू निकालते हैं तो ऐसे ही कैलकुलेट होता है. तो यहाँ पर आ जाएगा आपका डिस्काउंट रेट. सो डिस्काउंट रेट इज 9%. ओके. एंड व्हाट इज द फ्यूचर वैल्यू ऑफ कैश फ्लो? इट इज 25,000. सो 25,000 divided by 9%. So this becomes 2,77,777. तो आपका एनपीवी यहाँ पर नेगेटिव आने वाला है, नेगेटिव 22,223. सो इनमें से जो आपका करेक्ट आंसर होगा वो ये होगा. दिस इज गोइंग टू बी द करेक्ट आंसर. ये ध्यान रखना, ये ट्रेडिशनली जैसे एनपीवी का क्वेश्चन आते हैं वैसा नहीं था. अभी ट्रेडिशनली इस तरह से आप प्रेजेंट वैल्यू निकालते हो, बिकॉज ये फाइनाइट कैश फ्लो है. बट दिस इज व्हाट, दिस इज अ इनफाइनाइट कैश फ्लो, right? So if there is a infinite cash flow, the present value is calculated like this: future value of the cash flow divided by the discount rate. Then we have question number 26. It says that which approach in capital structure argues that the overall capitalization rate and the cost of debt remains constant for all the degree of leverages, as the same is offset by the increase in the equity capitalization rate. तो यहाँ पर अपने पास आप देखो कैपिटल स्ट्रक्चर से रिलेटेड यहाँ पर क्वेश्चन आया, और दो अप्रोच होता है. एक होता है हमारे पास नेट इनकम अप्रोच, और एक होता है हमारे पास नेट ऑपरेटिंग इनकम अप्रोच. सो नेट इनकम अप्रोच बेसिकली क्या करता है, वो आपसे कैलकुलेट करवाएगा नेट प्रॉफिट, नेट प्रॉफिट को कैपिटलाइज करवाएगा विद द कॉस्ट ऑफ इक्विटी, और इससे आपके पास आ जाता है द वैल्यू ऑफ इक्विटी. और इस वैल्यू ऑफ इक्विटी में आप डेट को ऐड करते हो, तो आपके पास यहाँ पर आ जाता है द वैल्यू ऑफ द फर्म, राइट. तो ये हो गया आपका नेट इनकम अप्रोच. और अगर आप नेट ऑपरेटिंग इनकम अप्रोच को देखो, तो नेट ऑपरेटिंग इनकम अप्रोच के अंदर हम कैपिटलाइज करते हैं ईबीआईटी को. सो ईबीआईटी अपॉन केई, दिस इज कैपिटलाइज्ड एंड वी गेट द वैल्यू ऑफ फर्म, and in this we deduct the value of debt so that we get value of इक्विटी. तो अब आप इसमें चेक करो, देखो वॉल्टर एंड गॉर्डन तो डिविडेंड पॉलिसी का कॉन्सेप्ट है, तो ये तो डेफिनेटली यहाँ पर आएगा नहीं. एनआई अप्रोच एंड एनओआई अप्रोच है. सो एनआई अप्रोच, एनओआई अप्रोच, अब आप बताओ इसमें से करेक्ट आंसर कौन सा होगा? ओवरऑल कैपिटलाइजेशन रेट एंड द कॉस्ट ऑफ डेट रिमेन्स कांस्टेंट, ओके, एंड इट इज ऑफसेट बाय इंक्रीज इन दिस. तो इसमें आपका करेक्ट आंसर हो जाता है ऑप्शन नंबर बी, दैट इज द नेट ऑपरेटिंग इनकम अप्रोच, राइट. ओवरऑल कैपिटलाइजेशन रेट की यहाँ पे आप यूज करते हो. देन वी हैव नेक्स्ट क्वेश्चन, that an arrangement where bank allows a borrower to overdraw up to a certain limit for a working capital finance is called as, it is called as cash credit. टर्म लोन रहता है आपका, ये टर्म लोन बता रहा हूँ अपना, ओवरड्राफ्ट फैसिलिटी जिसको हम बोलते हैं कैश क्रेडिट ओवरड्राफ्ट फैसिलिटी. टर्म लोन आपके कहाँ यूज आएगा? टर्म लोन होता है लॉन्ग टर्म लोन. लीवरेज बाई आउट क्या होता है? जब आप किसी कंपनी का टेक ओवर करते हो यूजिंग लोन फंड्स. और ब्रिज लोन क्या होता है? दो लोन के बीच में, मतलब आपका जो लोन सैंक्शन हो गया है, ठीक है, और जब लोन आपको मिलेगा, डिप्लॉयमेंट होगा फंड्स का, इसके बीच में जो टाइम पीरियड है उसके लिए आप ब्रिज लोन लेते हो। जैसे मेरा जनवरी में लोन सैंक्शन हो गया और मेरे को पैसे बैंक अप्रैल में डिप्लॉय करेगा, सो फॉर 3 मंथ्स आई कैन नॉट होल्ड माई प्रोजेक्ट फ्रॉम जनवरी टू अप्रैल। 3 मंथ्स के लिए मैं यहाँ पर क्या लूंगा, ब्रिज लोन लूंगा। Then we have question number 28. Funds which represents by check which have been issued but which have not been debited by the bank is technically again referred as a float. Floating का concept आपने इसमें देखा होगा receivable management के अंदर, ठीक है, float. So this is called as the float. Then we have question number 29. So net working capital of a firm is 14 lakh rupees. Okay. It has purchased 30 lakh worth raw materials on credit, issued 7% debentures of 20 lakh and purchased a machine of 18 lakh. The net working capital of the firm will be what? Now we know what is the net working capital. Net working capital is current assets minus the current liabilities. अब यहाँ पर आपको कुछ ट्रांजैक्शंस बताएं, तो तीनों ट्रांजैक्शंस में हम यहाँ पर चेक कर लेंगे कि क्या इम्पैक्ट होगा। तो आप देखो, करंट एसेट्स माइनस करंट लाइबिलिटी एट प्रेजेंट इज व्हाट, 14। अब हम देखते हैं फर्स्ट ट्रांजैक्शन में क्या हो रहा है। इट सेज दैट दे हैव परचेज 30 लाख वर्थ रॉ मटेरियल। तो आप देखो, करंट एसेट्स में आपका स्टॉक बढ़ जाएगा 30 लाख रुपीज से, लेकिन 30 लाख रुपीज से आपका कैश भी कम हो जाएगा यहाँ पे, क्योंकि इन्होंने, अच्छा, इन्होंने क्रेडिट में परचेज किया है, दे परचेज इट ऑन क्रेडिट। तो आप ये देखिए, 30 लाख रुपीज से आपका स्टॉक बढ़ेगा, तो 30 लाख रुपीज से आपका क्रेडिटर्स भी बढ़ जाएगा, जो कि यहाँ पर क्या होने वाला है, डिडक्ट होने वाला है। अगर कैश होता तो इसका नेट इम्पैक्ट यहाँ पर जीरो आता, बट अभी भी यहाँ पर इसका नेट इम्पैक्ट जीरो ही आने वाला है, क्योंकि यहाँ से आपका स्टॉक बढ़ गया, ये आपका स्टॉक बढ़ गया, और यहाँ पर आपका क्रेडिटर्स भी बढ़ गया, जो कि यहाँ पर डिडक्ट होने वाला है। देन वी हैव इट इशूड 7% डिबेंचर्स फॉर 20 लाख। तो इससे आपका 20 लाख रुपीज का कैश आपके पास आ गया, लेकिन ये जो डिबेंचर्स है, क्योंकि लॉन्ग टर्म फंड्स है, तो करंट लायबिलिटी में इसका कोई भी इंपैक्ट नहीं होगा। फिर इन्होंने, दे हैव परचेज्ड अ न्यू मशीन फॉर 18 लाख रुपीज। तो जब इन्होंने 18 लाख रुपीज का नया मशीन परचेज किया, तो 18 लाख रुपीज का कैश यहाँ पर इनका कम हो जाएगा, बट मशीन क्योंकि फिक्स एसेट्स है, तो यहाँ पर करंट एसेट पे उसका, करंट एसेट्स और बाकी करंट लायबिलिटीज में कोई इंपैक्ट नहीं होगा। तो आप अगर चेक करो, 14 लाख, इसका इंपैक्ट जीरो, ये हो जाता है +20 और ये हो जाता है -18। तो अब आप क्या बोलोगे, इस समय आपका करंट रेशो कितना हो गया है, इट इज 16। व्हेन यू गेट दीज काइंड ऑफ क्वेश्चंस, बी वेरी वेरी केयरफुल। यहाँ पे आपको चेक करना है किसमें क्या। आप देखो, अगर यहाँ पर क्रेडिट है तो इस तरह से करके वर्कआउट किया, कैश होता तो हम यहाँ पर इधर डिडक्ट कर देते, तो अकॉर्डिंगली यहाँ पर आपको, हालांकि इंपैक्ट आपका वहां पर सेम है, बट बी वेरी वेरी केयरफुल व्हेन यू गेट दीज काइंड ऑफ क्वेश्चंस। एंड मेरा एडवाइस ये रहेगा, डोंट राइट इट, आई मीन डोंट डू इट ओरली, write it on the paper, scribble this way, and then get the right answer here. Then we have this another question, that a firm has a degree of operating leverage 5, degree of finance leverage 4, the interest burden is 300 lakhs, variable cost as a percentage to sales is 75% and the effective tax rate is 45%. अब आपसे यहाँ पर वो पूछ रहा है what is going to be the fixed cost. So simple, we need to make that table. So first we go here, that we know degree of operating leverage is contribution upon EBIT, correct? And we also know that degree of finance leverage is EBIT upon EBT. Now, if we see, interest burden we know is 300. So we can also write EBIT as like this, EBT plus interest upon EBT. So degree of finance leverage is what it is, 4. EBT is something which we need to find out. Interest we know is 300 upon EBT. So once we solve this equation, we get EBT, और हमारा EBT यहाँ पर आ जाएगा 100. EBT will be 100, और इससे हम EBIT कैलकुलेट कर सकते हैं. Using this we can calculate the EBIT. What is EBIT equal to? This is going to be 100 plus interest burden of 300. So ये हो गया 400. Now degree of combined leverage, operating leverage को हम use करते हैं. So degree of operating leverage is 5 year. Contribution is something which we need to find out. EBIT is 400. So this implies what is contribution? Contribution is 2000. Now contribution is 2000 and EBIT is 400. This means what is the fixed cost? The fixed cost is 1600. The simple logic to this is, if you see, it is sales minus variable cost, which is contribution. Contribution minus fixed cost is EBIT. EBIT minus interest is your EBT. यहाँ पर हमें इंटरेस्ट दिया हुआ था और इन दोनों के बीच का रिलेशन दिया हुआ था. सो फर्स्ट वी फाउंड आउट दिस और रिवर्स कैलकुलेशन बेसिकली हम लोगों ने किया. यहाँ से हम ऊपर गए तो हमें यहाँ पर 400 मिला. फिर कंट्रीब्यूशन और इसका रिलेशन दिया हुआ था तो ये हमें 2000 मिल गया. तो बैलेंसिंग फिगर हमारा यहाँ पर फिक्स कॉस्ट आ गया विच इज 1600. So the correct answer is option number A, 1600. Then we have another question. ABC analysis is useful for. So ABC analysis स्टॉक के लिए आपका यूज होता है. और स्टॉक में अगर आप देखो तो एबीसी में तीन कैटेगरीज में हम स्टॉक को स्प्लिट करते हैं. कैटेगरी ए जिसमें स्टॉक को हाई रिकॉर्ड्स आपको मेंटेन करना है, इट इज वेरी टाइटली कंट्रोल्ड, राइट. सो दिस इज वेरी टाइटली कंट्रोल्ड. Then we have option number B. This is less tightly controlled. And C is one which has got the simplest control. इसमें आपके documentation ज़्यादा नहीं होते. Simplest control for the stock. सो एबीसी एनालिसिस. और ये कैसे डिटरमाइन होता है? वी यूज इट बेसिकली यहाँ पर जो वैल्यू रहेगा, वैल्यू ऑफ द स्टॉक और उसके यूसेज के हिसाब से यहाँ पर रहेगा. सो एबीसी एनालिसिस इज यूजफुल फॉर एनालाइजिंग द inventory based on their usage and the movement. So the correct answer is this. Then we have another question from working capital management. Here it says that consider the following factors. Gross operating cycle is 80 days. Net operating cycle is 55 days. Raw material holding period is 40. Conversion period is 2, that is work in progress. Finished goods is 20 days. Now what is going to be the average collection period? So first understand gross और net में क्या difference है. So आप अगर net operating cycle को check करो तो it is again current assets minus current liability. So we have raw material holding period, then we have the conversion period, and then we have the finished goods होल्डिंग पीरियड. यहीं पर आ जाएगा हमारा एवरेज कलेक्शन पीरियड और ये बन जाएगा ग्रॉस ऑपरेटिंग साइकिल. और इस ग्रॉस ऑपरेटिंग साइकिल से फिर हमारे पास क्या आता है? नेट ऑपरेटिंग साइकिल. सो आप अगर यहाँ पर चेक करो, इसमें जब हम अपने पेमेंट पीरियड जो है, हमारा पेमेंट पीरियड जितना भी हमारा रहता है डिले, वो हम अगर निकाल दे तो हमारे पास आ जाएगा नेट ऑपरेटिंग साइकिल. सो इन दिस क्वेश्चन इफ यू सी, we have the gross operating cycle at 80. The raw material holding period is for 55 days. The conversion period is for 2 days. The finished goods holding period is for 20 days. What we have to calculate is this. तो इन तीन का अगर आप टोटल लगाओ तो this is 55, this is 75. 55 and sorry, raw material holding period is for 40 days. So this is 40 and this is 20, 60 and this is 2. So this is 62. So 62 minus 80.
18.
So 18 days. So 18 days, option number C, right? Then we go ahead. तो net operating cycle का हमारे यहाँ पर कोई use था ही नहीं. Then next question that we have is MNC expects to increase the sales by 10% from the current year level of 5 million with a net profit margin of 8%, payout ratio of 30%. What financing for the next year will be available from the internal sources? तो basically आप यहाँ पर क्या बोलोगे? 5 million. So 5 million is 50 lakhs. आप 50 लाख रुपीस अर्न करोगे, उसमें 10% सेल्स इंक्रीज हो जाएगा। सो इंटू 110% कर दो आप यहाँ पे, क्योंकि 10% से इंक्रीज होगा सेल्स। सो योर सेल्स आर गोइंग टू बी 55 लाख रुपीस, and on this 55 lakh rupees you are going to make a profit of 8%. So 55 lakhs का 8% would be 4 lakh 40,000, राइट। और इस 4 लाख 40,000 में आप ये देखो पे आउट कितना कर दोगे, 30%। तो 70% आपका यहाँ पर क्या रह जाएगा, रिटेन्ड अर्निंग्स में चला जाएगा। सो दिस इज 70%। सो 4 लाख 40,000 का 70%, now we have to take
308,000.
308,000, so this is 3,08,000. So this is the correct answer here, option number B, right? Then we have question number 34. If a company acquired a helicopter for the top management for a certain period on a fixed payment, what will be the true regarding the leverage? So leverage is also considered as the risk. और आप अगर चेक करो डिग्री ऑफ कंबाइंड लीवरेज जो है, ये बात करता है कंट्रीब्यूशन अपॉन योर ईबीटी। डिग्री ऑफ ऑपरेटिंग लीवरेज बात करता है कंट्रीब्यूशन अपॉन ईबीआईटी, एंड डिग्री ऑफ फाइनेंस लीवरेज बात करता है EBIT upon EBT. So when we talk about degree of combined leverage, this is your overall risk. Okay. When we talk about this, it talks about the operational risk, or operational risk may it takes into consideration the fixed cost. And when we talk about degree of finance leverage, this is the finance risk, and here we take into consideration the इंटरेस्ट। सो फिक्स कॉस्ट का यहाँ पे बात हो रहा है, तो आपका ऑपरेशनल रिस्क इंक्रीज हो जाएगा। सो क्योंकि फिक्स्ड पेमेंट आपका जा रहा है, फिक्स कॉस्ट, सो योर डिग्री ऑफ ऑपरेटिंग लीवरेज इज गोइंग टू इंक्रीज। आप इसको ऐसे भी समझ लो, आप ये देखो एक सिंपल एग्जांपल के थ्रू, इफ आई गिव यू, लेट्स से कंट्रीब्यूशन माइनस फिक्स कॉस्ट, ये क्या हो जाता है आपके पास, EBIT। Now, if I say, let's say at present the contribution is 500 and the fixed cost is, let's presume, 100. So what is going to be EBT? It is going to be 400. Now, if we divide these two, what is going to be degree of operating leverage? It is going to be 500 upon 400. तो ये कितना होता है? 500 upon 400. So this is 1.25. Now let's say I say fixed cost आपका increase हो गया. Now fixed cost has become, let's say, 180 rupees. So 500, ये तो आपका same है. This has become 180. So 500 minus 180. This becomes 320। और अब आप यहाँ पे डिग्री ऑफ ऑपरेटिंग लीवरेज देखो, 500 डिवाइडेड बाय 320, सो दिस बिकम्स 1.5625। तो आप देखो फिक्स्ड कॉस्ट इंक्रीज होने से आपका ऑपरेटिंग लीवरेज इंक्रीज हो गया, बिकॉज योर ऑपरेशनल रिस्क गोज अप। सो दिस इज द करेक्ट आंसर हियर। देन वी हैव, which of the following is not a valid assumption of approach to the capital structure? सो इसमें आपके जो अप्रोच में assumptions है, let's discuss those assumptions. The assumptions are that there is no tax. Then the another assumption is that there is no transaction cost. Then the another assumption is that there is no flotation cost. That is the transaction cost. That is, there is no flotation cost also. Then there is no tax, there is no dividend distribution tax, there is no dividend distribution tax. Then they say that the information is widely available to everyone, that is, there is symmetry of information, sabko pata hai, everything, all the information is known, there is parity, there is no disparity amongst the information. And then the borrowing cost, that is the cost of debt, the borrowing cost is same for, the borrowing cost is same for the corporates, the company, as well as for the investors. ये इनके assumptions है. अब यहाँ पर वो पूछ रहा है which of the following is not a valid assumption of MM approach. So not a valid. The securities are infinitely divisible. Lack of free flow of information. तो ये देखो ये symmetry of information के साथ ही आ गया. There is lack of free flow of information. ऐसा नहीं है. वो यही बोलते हैं that all the information are freely available there. Right? So ये आपका correct answer हो गया. Then we have question number 36, which says that which of the following will not have an impact on the firm's treasury position. So इसमें आपका correct answer आता है dividend payment cash outflow, tax payment cash outflow, buying fixed assets cash outflow. But issuing bonus share, there is going to be no impact because this is a non-cash item. So this is a non-cash item. Therefore, there is going to be no impact. Then we have a firm has a degree of operating leverage of 6 at certain production level. If the sale increases by 1%, it implies that. तो अपने को एक और चीज देखना है कि degree of operating leverage का there is another formula. So it is your percentage change in EBIT, okay, upon percentage change in sales. Apart from contribution upon EBIT, ये एक formula है. Then for degree of finance leverage, there is another formula that there is percentage change in the EPS upon percentage change in EBIT. So ये दो मैं आपको इसलिए बता रहा हूँ just because in case you get a question in your exam. At present we have to just use this, but since I said we will be revising the concept also. So degree of combined leverage is going to be percentage change in the EPS upon percentage change in the sales. Okay. Now if you see a firm has degree of operating leverage as 6, and if the sales is increased by 1%, right, what is going to be the percentage change in EBIT? The EBIT will increase by 6%. ये देखिए, this is EBIT, so 6 into 1, the EBIT will increase by 6%. Okay, so ये आपका correct answer हो गया यहाँ पे. Then you have determination of the safety stock level requires a trade off between. So यहाँ पर आपका safety stock level में ये आ जाएगा आंसर, carrying cost and stock out cost. Now why, what is the logic here? देखो carrying cost basically होगा अगर आप स्टॉक को सेफ्टी स्टॉक लेवल हम वो रखते हैं, दैट स्टॉक लेवल वी वांट जहां पर हम स्टॉक आउट भी नहीं हो जाए, ठीक है, और दूसरा ऐसा भी नहीं हो कि दे वी हैव टू मच ऑफ स्टॉक इन अस. सो this is the basically decision which we take where we try to make a balance between the holding cost versus the opportunity cost due to stock out. The opportunity cost lost due to stock out, इन दोनों के बीच में हम यहाँ पे ट्रेड ऑफ करते हैं, which is the carrying cost as well as the stock out cost. ये आपके पास आएगा. Then which of the following is not a valid assumption for the EOQ model? तो EOQ मॉडल के अंदर यहाँ पर EOQ मॉडल अगर आपको याद हो, इकोनॉमिक ऑर्डर क्वांटिटी, so ये होता था 2 into your annual consumption, जितने यूनिट्स आपको चाहिए एनुअल कंजम्पशन यूनिट्स, into the ordering cost per order and divided by the carrying cost per unit. और इस पूरे को हम रूट कर देते थे, ये फॉर्मूला था. नाउ इट सेज दैट डिमांड फोरकास्ट इज अवेलेबल, तो ये तो वैलिड है. इन्वेंट्री कैन बी रिप्लेनिश्ड इमीडिएटली, ये भी वैलिड है. देन वी हैव कॉस्ट पर ऑर्डर इज वेरिएबल, नो, कॉस्ट पर ऑर्डर इज फिक्स्ड. तो ये आपका वैलिड assumption नहीं है. सो ऑप्शन सी इज द करेक्ट आंसर हियर, राइट. देन question number 40, which of the following investment decision is required to be taken for stock if its intrinsic value is greater than the market value. So if the intrinsic value is greater than the market value, we say buy the stock, right? Because we say that the stock is undervalued. इंट्रिंसिक वैल्यू हमारे हिसाब से स्टॉक का वैल्यूएशन होना चाहिए लेट्स से 50 रुपीज वर्सेस वो मार्केट में अभी कितने का मिल रहा है, वो मार्केट में अभी 30 रुपीज का मिल रहा है. सो वी आर गोइंग टू से दिस इज अंडर वैल्यू स्टॉक, बाय इट, राइट. देन वी हैव another question, question 41. Monthly demand for a raw material is 150 and ordering cost is 8. Annual carrying cost per unit is 2. You need to find out the economic order quantity. तो आप यहाँ पर करो 2 into annual consumption. अभी देखो 150 is monthly demand. So this is going to be 150 into 12. And then we have the ordering cost, which is 8 rupees. And we have the carrying cost, which is 2 rupees. और इस पूरे को हम क्या कर देंगे, root. So 2 into 150 into 12 into 8 डिवाइड बाय 2 रूट. तो यहाँ आंसर आ गया आपका 120. So 120 is the correct answer here. Then we have question number 42, which says that earnings per share is equal to, so EPS is equal to, ये सबसे ज्यादा इजी क्वेश्चन होगा, प्रॉफिट आफ्टर टैक्स डिवाइडेड बाय द नंबर ऑफ शेयर्स इशूड. बट जल्दीबाजी में हो सकता है आप इसको भी टिक कर दो, बट ध्यान रखना इन दोनों में क्या डिफरेंस है. हियर इट इज ऑथराइज शेयर कैपिटल, सो ऑथराइज शेयर कैपिटल से नहीं, वी कैलकुलेटेड विद द number of shares which are issued, the equity shares which is outstanding. Then we have another question. Interest coverage ratio is 6. Is it indicates what? So what is interest coverage ratio? Interest coverage ratio is what times of the profit you are making as compared to the interest, and which profit we take into consideration, the profit immediately from which the interest is being paid. So this means the EBIT is 6 times the interest, and higher the interest coverage ratio, the better and the safer it is for the creditors or the lenders who have given you the money, right? Then we have question number 44, which says that debtors turnover ratio reflects what? So debtor turnover ratio reflects the total credit sales divided by the average debtors year. So this is the debtors in relation to the total credit sales. This is the debtors turnover ratio. So the formula is total credit sales divided by average debtors. So this is your debtors turnover ratio. Then we have another question. Consider the following data and compute the total sales amount. So it says that closing balance of the receivables is 30, opening balance of the receivables is 20, average collection period is 25, credit sales वो आपको बता रहे कितना है 73% of the sales, और आपको यहाँ पर क्या निकालना है, total sales amount. So be very careful, हमें cash sales और credit sales दोनों यहाँ पर चाहिए. तो सबसे पहले आप देखो हमें एवरेज कलेक्शन पीरियड यहाँ पर गिवन है. सो वी नो द एवरेज कलेक्शन पीरियड इज इक्वल टू द एवरेज receivables, right, divided by the total credit sales into यहाँ पर आ जाएगा. Now since it is given in the days, we are going to multiply 365. This is again given in the question. You have to assume 365 days in a year. So average collection period is 25 days. Average receivables, we can take it 20 plus 30 divided by 2. So this is 30 plus 20 divided by 2. And then we are going to get the credit sales into 365. So with this, we get the credit sale. And what is going to be the credit sale? The credit sale is going to be 30 plus 20 divided by 2. तो ये हो गया आपके पास 25 divided by 25, ये इधर आ गया और ये इधर चला गया, into 365. So we know the credit sale, which is 73%, is 365. तो यहाँ पर आपका टोटल सेल्स विच इज 100% वो कितना होगा? सो इट इज गोइंग टू बी 365 अपॉन 73%. सो 365 डिवाइडेड बाय 73%, ये आंसर आ गया आपका 500. So this is the correct answer here, right? Then we have another question. If the expected dividend is less than the actual dividend paid, the rational expectation approach suggests that the share price is going to increase, क्योंकि आपने यहाँ पर जो expected dividend है, ठीक है, वो कम था, and actual dividend आपने ज़्यादा दिया. I was expecting a dividend of 5 rupees, company paid a dividend of 8 rupees, so I'll be very happy. So the share price is going to increase, and if the share price is going to increase, the value of the firm will also go up, because what is the value of the firm? It is the share price into the number of shares, right? और ये देखिए आपका आंसर D answer is going to be the correct one, right? Then we have another question. It says that economic order quantity of a firm is 7200. The minimum order size stipulated by the supplier is 9,000 units for utilizing the cash discount on the purchase price. The annual usage of the material is 80,000 and cost per order is 100. So if the company decides to utilize the cash discount, the savings in the ordering cost will be how much? So हमें यहाँ पर क्या check करना है? That what is going to be the ordering cost if we place the order as per EOQ. So if we place the order as per EOQ, so पूरे साल में 80,000 units we use during the entire year, and every order is for 7,200 units. So how many orders we place? So this is 80,000 divided by 7,200. So we place 11.11, that is 12 orders. We are going to place 12 orders, and one order, the cost is what? It is 100 rupees. So my ordering cost is going to be rupees 1200. Okay. This is as per EOQ. But if I avail the discount, then I will have to place order for minimum of 9,000 units. So in that case, 80,000 divided by 9,000. This means in a year, I am going to place 8.88 orders. So this is, I am going to place 9 order. One order will be for, the ordering cost will be 100 rupees. So 900. So 1200 minus 900, I am going to make a saving of 300 rupees. Now, none of the option is correct. None of the option is correct. There are error in this paper. And this is again one of the question. This is 300, right? Then we have question number 48, which says that Walter approach can be applied only to those companies where we have earn high profit. No, this is not. Making investment by resorting high level of debt. No. Make investment without borrowing or external. So this is one of the assumptions there, that only the retained earnings is the source of making investments in the company. Then we have question number 49. Cash model was given by, it was given by Baumol model, right? Then we have the weighted average cost of capital computation, WACC. So weighted average cost of capital is what? It is basically assigns both on the market value as well as on the book value, WACC. So how do we calculate that? We take cost of debt into the weight of debt plus the cost of equity into the weight of equity plus the cost of preference into the weight of preference. Now this weight can be taken into consideration by way of book value, or we can also take the market value. Accordingly, we can calculate here, right? Then we have question number 51, which says that the liability side of the balance sheet shows 25 lakh rupees equity, retained earnings 50 lakh, face value of the share is 100, market value is 300. If the investor expects a return of 18%, and if the flotation cost of issuing fresh shares is 5%, what is the cost of retained earning. So in this case, the cost of retained earning will be same as the cost of equity, correct? और ये आ जाता है आपके पास ऑप्शन नंबर बी, that is 18%. So if the investor expects a rate of return of 18%, so your cost of retained earning will be equal to the cost of equity. Flotation cost will not be applied to this, right? So in case of cost of retained earning, there is no flotation cost. This we had discussed at the beginning also, जहां मैंने आपको बताया था that cost of equity is always equal to the cost of retained earning. बट अगर एक नया शेयर आ जाएगा तो वहां पर फ्लोटेशन कॉस्ट इक्विटी में रहेगा, लेकिन रिजर्व्स में फ्लोटेशन कॉस्ट नहीं होता, और इसी के लिए कॉस्ट ऑफ अर्निंग्स, कॉस्ट ऑफ इक्विटी इज मोर देन कॉस्ट ऑफ रिटेन्ड अर्निंग्स। ना अब ये देखो, ये इतना बड़ा क्वेश्चन ऐसे करके, और यहाँ पर एक सिंपल सा पॉइंट में आपका आंसर आ गया। Then we have another question, that the capital structure of NIL Limited is equity plus reserves and surplus, 200 lakhs preference shares term loan. आपसे वो पूछ रहा है what should be the approximate EBIT so that the earnings per share is zero. Now earnings per share को अगर आपको जीरो करना है तो आपको profit after tax less preference dividend should be what? It should be zero. So how do we calculate EPS? So in difference point में जैसे हम EPS को calculate करते थे वो ऐसे रहता था, EBIT, EBIT minus interest, करेक्ट, देन टैक्स डिडक्ट हो जाएगा, वन माइनस टैक्स, फिर आप यहाँ से प्रेफरेंस डिविडेंड करोगे और आप चाहते हो ये क्या आ जाए, जीरो आ जाए व्हेन वी डिवाइड इट विद द नंबर ऑफ शेयर्स. सो EBIT इज समथिंग विच वी हैव टू फाइंड आउट. इंटरेस्ट हमें पता है 150 लाख का टर्म लोन है और 12% का इंटरेस्ट है. सो 150 इंटू 12%, इट इज व्हाट, इट इज 18, राइट. टैक्स रेट हमें पता है कितना, 35%. सो 1 माइनस 0.35. प्रेफरेंस डिविडेंड हमें पता है 50 लाख का 10%, विच इज 5. एंड हाउ मेनी नंबर ऑफ शेयर्स यू हैव, एनीवे इट वोंट मैटर. वाई? बिकॉज यहाँ पर तो वैसे ही वो जीरो आ जाएगा, तो आप कुछ भी करो उसको मल्टीप्लाई करोगे तो वो जीरो ही रहेगा. नाउ वी जस्ट हैव टू सॉल्व दिस, सो दिस होल वुड बी इक्वल टू जीरो. सी नंबर ऑफ शेयर्स अगर मैं आपको बोलता हूँ 100 भी है तो 100 अल्टीमेटली जाकर इधर मल्टीप्लाई होगा. सो एनीथिंग मल्टीप्लाइड बाय जीरो इज जीरो ना, सो वी डोंट नीड दैट. सो आप यहाँ पे देखो, दिस इज गोइंग टू बी EBIT माइनस 18, और ये हो गया 0.65 इक्वल टू, अब ये -5 था, ये उधर जाके +5 हो जाएगा. देन EBIT माइनस 18 is equal to 5 upon 0.65. So 5 upon 0.65 is equal to 7.69, और उसमें ये 18 आकर ऐड हो जाएगा. सो दिस प्लस 18, सो 25.69. तो ये आपका करेक्ट आंसर आ गया, 25.69. ओके, इसको एक और तरीके से आप सॉल्व कर सकते हो, ठीक है, वो मैं आपको यहाँ पे बताता हूँ. टेक इट दिस वे, यू हैव टू फाइंड आउट द EBIT. इसमें से आपने इंटरेस्ट को डिडक्ट करना है, तो आपके पास आ जाएगा EBT. EBT में से आप टैक्स को डिडक्ट करोगे तो आपके पास आ जाएगा EAT. इसमें से आप प्रेफरेंस डिविडेंड को पे करोगे तो आपके पास आ जाएगा अर्निंग्स अवेलेबल फॉर इक्विटी शेयर होल्डर. दिस यू वांट जीरो. प्रेफरेंस डिविडेंड यू नो इट इज 5. टैक्स यू नो इट इज एट द रेट 35%. Interest, you know it is 18. What you have to find out is the level of EBIT. So if this is 5, this will have to be 5. Only then this is going to be 0. So if this is 5 and this is 100%, this is 65%. So 5 divided by 65%. So this becomes 7.69. Ab 7.69 something minus 18 should be 7.69. So what should be this equal to? 18 plus 7.69. So this again becomes your 25.69. जब इस टाइप का क्वेश्चन आपको मिले, just do this calculation once again. Do you get zero here? So 25.69 minus 18, you get 7.69. Now 7.69 into 35% is what it is, 2.69. So if you deduct this, you get 5, and 5 minus 5, this is 0. So ये आपका correct answer हो गया. So this is question number 52. Then we have ABC Limited book of account show a profit of EBITD. So this is EBIT of, basically this is also called as EBITDA, profit before or interest before. Yes, the earnings before depreciation, interest and tax. This is 500. 12% is the debt for 1000 lakh. Depreciation is 100. Tax rate is 35%. What is going to be the profit after tax? So this is a very simple question. We know EBITD. This is 500. दिस इज 500. सबसे पहले इसमें आप यहाँ पे डेप्रिसिएशन को डिडक्ट करोगे. सो व्हेन यू डिडक्ट डेप्रिसिएशन हियर 100, so you get EBIT, which is 400. From here you are going to deduct the interest, and the interest will be 120, 1012. So this is 120. So we get earnings before tax. So this becomes 280, and in this 280 you are going to deduct tax of 35%. So 280 into 35%, so your earnings after tax is 182. तो ये आपका correct answer हो गया. Then we have question number 54, which says that as you increase the number of stocks in the portfolio, the systematic risk. Now आप मुझे बताओ, systematic risk is not going to remain constant, because उसको आप किसी भी एंगल से चेंज नहीं कर सकते. ठीक है, उसको आप प्रेडिक्ट नहीं कर सकते, उसको डाइवर्सिफाई नहीं कर सकते. इफ यू रिमेंबर when we did question number 4, so if you just go to slide number 4, we did this question only. So this is undiversifiable risk, right? So even if you increase the number of more stocks, you cannot diversify the risk here. Okay, so even if you increase the number of stocks in the portfolio, the systematic risk is going to remain constant. Then we have current ratio is 4:1. Net working capital is 30,000. You need to find out the amount of liquid assets if the value of stock is 8,000. So we know liquid assets is your current assets minus the stock. And what is net working capital? Net working capital is current assets minus current liability. We also know what is current ratio. It is current assets upon current liability, which is at present 4 upon 1, which is current assets upon current liability. So this implies that current asset is equal to 4 times the current liability. And here we have net working capital is equal to current assets minus current liability, which is equal to what? Which is equal to 30,000. So we replace current assets with 4 times the current liability. So 4 times current liability minus current liability is equal to 30,000. So what is current liability equal to? It is equal to 30,000 divided by 3, that is 10,000. So if current liability is 10,000, what is going to be the current assets? The current assets are going to be 4 times the current liability. So this becomes 40,000. अब इसमें आप 8,000 के स्टॉक को डिडक्ट कर दोगे तो 32,000 का आपके पास यहाँ पे लिक्विड एसेट्स आ जाएगा. The correct answer is 32,000. Then we have a sum of rupees 50,000 is invested at the rate 12% per annum for 6 years. What is going to be the present value of its maturity, assuming the required rate of return is 10%? So 10% we are going to use as the discount rate. This is going to be the discount rate, and 12%, 10% is the discount rate, 12% is the return on this 50,000. So again, if you want, we can calculate it in the lengthy manner. Otherwise, there is also a shortcut way. So आप देखो year 1, year 2, year 3, year 4, year 5, and year 6. And if you see what is going to be the cash flow, 12% of 50,000. This means every year you are going to get 6,000, 6,000, 6,000, 6,000, 6,000. But last year you are going to get 56,000 क्योंकि प्रिंसिपल अमाउंट भी तो रीपे हो जाएगा ना आपका. द प्रिंसिपल अमाउंट विल ऑल्सो गेट रीपेड. तो ये आ जाता है आपके पास यहाँ पे 56,000. Then we will take the present value factor here. Okay, the present value factor will be at the rate 10%. So this is 0.9090, then 0.8264. So present value factor कैसे निकलेगा? 1 divided by 1.10, 1 divided by 1.10 इक्वल टू, और अगर आपका कैलकुलेटर मेरे जैसा है, सो 1 divided by 1.1 इक्वल टू, then divide by 1.1 equal to, आप करते जाओगे, so you are going to get the answer. So this is 0.7513, this is going to be 6830, this is going to be 6209, and this is going to be 5644. तो इसी का आपको फिर क्या करना है? प्रेजेंट वैल्यू ऑफ कैश फ्लो लेना है. अब कैलकुलेटर पे अगर आप करो तो 6000 डिवाइडेड बाय 1.1, वो इक्वल टू एम प्लस वाले अप्रोच से आप सॉल्व कर सकते हो, या फिर आप यहाँ पे क्या करो, इस तरह से करके इंडिविजुअली अमाउंट लिख लो. सो दिस बिकम्स 5454, दिस विल बिकम 4958, then this will become 4507, then this will become 4098, then this will become 3725, and this will become 31,606. So the total amount that comes here is 54,348. तो आपका यहाँ पर नियरेस्ट आंसर जो आ रहा है वो 55,667 आपको मिलेगा. Right, so this is going to be the correct answer here. So 5454 plus 4958 plus 4507 plus 4098 plus 3725 plus 31606. So 54,300. So near about आपका यहाँ पर करेक्ट आंसर यही रहेगा. और इंडिविजुअली अगर आप करो तो ये आप इस तरह से प्रेजेंट वैल्यू निकाल सकते हो. Then we have question number 57. This says that the cost of capital of the firm is 12%. The expected earnings per share is 20 rupees. Existing payout is 25%. तो हम एक एक करके यहाँ पर वैल्यू लिखते जाएंगे फिर. And payout ratio, the company is planning to increase the payout ratio is to 50%. 50 से 25 से 50% payout ratio हो जाएगा. So 10 rupees will be the dividend. What will be the effect of change in the market price in the equity as per the Gordon model if the reinvestment rate is 15%? Okay, so we know that the cost of equity is 12%, और आपको ये भी पता है EPS अब आने वाले टाइम पर आपको बता रहा है expected. So this means they have given you EPS 1 is going to be 20 rupees, right? और यहीं पर वो आपको बता रहा है डिविडेंड पर शेयर और डिविडेंड पे आउट रेशियो जो आपका है. अगर आपका डिविडेंड पे आउट रेशियो 25% होगा, दिस मीन्स यू आर गोइंग टू गेट 5 रुपीज. और अगर आपका डिविडेंड पे आउट रेशियो 50% होगा, दिस मीन्स यू आर गोइंग टू गेट 10 रुपीज का डिविडेंड. अच्छा, आर आपको पता है, आर इज 15%, right? We can also calculate the growth. Growth is equal to B into R. तो अगर आप 25% डिविडेंड डिस्ट्रीब्यूट कर रहे हो, दिस मीन्स 75% is retained and here 50%. So this is 75 into 15 and another is 50 into 15. So दो ग्रोथ रेट्स हमारे पास आ जाएंगे and we are going to calculate कि प्राइस में क्या चेंज आएगा. So this comes out to 11.25 and this is 7.5. So एक बार हम वैल्यू लेते हैं इसके हिसाब से. So 5 रुपीज का डिविडेंड, करेक्ट. R is KE is 12%, G is 11.25%। तो एक बार तो वैल्यू हम ऐसे कैलकुलेट करेंगे, P0 is equal to this. So this becomes 5% divided by 0.75%. So 5 divided by 0.75%, the value of the share is 666. And on the other hand, अगर हम ऐसे कैलकुलेट करें, P0 is equal to, ये हो गया 5, this is 7.5, so 12 minus 7.5, so this is 5 upon 4.5%. So 5 divided by 4.5%, the share value will become 111. तो क्या होगा, जैसे ही आप पे आउट रेशो को इंक्रीज कर दोगे, 25% पे आउट रेशो पे द शेयर प्राइस इज 666, और जैसे ही आप 50% पे आउट कर रहे हो, द शेयर प्राइस इज 111, राइट। सॉरी, यहाँ पर ये 10 रुपीज होना था, ये 10 रुपीज होगा। तो 10 divided by 4.5%, so this is 222, राइट। सो 666 से आपका प्राइस गिर के 222 रुपीज हो जाएगा। सो द प्राइस इज गोइंग टू decrease, and it is going to decrease by 444 rupees. So 57 ka correct answer is B. Then we have another question. Mr. A is planning to buy a security and is in dilemma regarding the price to be paid. He relied upon the required rate of return on the security. Help him to calculate the aforesaid required rate of return. If he has informed that the security standard deviation is 6%, the coefficient of correlation of the security with the market is 6, and the market standard deviation is 5%, रिस्क फ्री रिटर्न आपको दिया है 8 और मार्केट पोर्टफोलियो दिया है 15। सो बेसिकली आपसे फॉर्मूला यहाँ पर कैपेम वाला यूज करना है, एंड फॉर कैपेम वी नीड व्हाट, वी नीड रिस्क फ्री रिटर्न प्लस बीटा into return market minus the risk free return. So risk free return is given in the question, RM is also given in the question. What is not given is beta. बीटा के लिए फिर आप यहाँ पर क्या करोगे, फॉर्मूला यूज करोगे, and it is going to be coefficient of correlation with the stock in the market into the standard deviation security divided by standard deviation market. So RSM ये हमारे पास है 0.6, standard deviation of the security is 6, standard deviation of the market is 5. This means beta is what? Beta is 0.72. So once we get the calculation of beta, then we can calculate the CAPM return. So आप देखिए, देखो risk free return आपका कितना है, it is 8%, beta is 0.72, और ये हो जाएगा 12 minus 8%. So here the return comes out to 10.88%, which means option number B is the correct answer here. Okay, option B is the correct answer here. It's a easy question, but अगर ये formula आपको नहीं आता तो फिर कैपे में आप solve नहीं कर पाओगे, right? Then we have this another question. Firm A is considering a project. The project involves a cash outlay of 50,000, working capital outlay of 20,000, and is expected to generate a cash flow after tax of 12,000 per annum for the 5 years, excluding the working capital released back and terminal value of 20%. What would you advise to the company using net present value approach if the cost of capital is 10%? ठीक है, so capital budgeting के हर question में हम cash flow को पहले 3 categories में split करते हैं. So we have the initial cash flow. इनिशियल कैश फ्लो हमें पता है कितना होगा, 50,000 का इनिशियल आउटले एंड 20,000 का वर्किंग कैपिटल. सो दिस इज minus 70,000. Then we are going to calculate the subsequent cash flow. So subsequent cash flow हमें पता है हर साल 12,000 का कैश फ्लो आपको यहाँ पर अराइज होगा. अब आपको क्या चाहिए, आपको चाहिए प्रेजेंट वैल्यू फैक्टर 5 इयर्स तक 10% के हिसाब से प्रेजेंट वैल्यू फैक्टर. So what you can do, you can take the calculator, right? और 1 डिवाइडेड बाय 1.10 इक्वल टू, ये आ गया आपके पास 0.9090 m प्लस, देन अगेन इक्वल टू, और अगर आपके कैलकुलेटर में इक्वल टू वाला फॉर्मूला वर्क नहीं करता सो डिवाइड बाय 1.1 इक्वल टू आप करोगे तो 0.8264 आएगा m प्लस, देन अगेन रिपीट द सेम प्रोसेस 0.7513 थर्ड ईयर का आ गया वैल्यू, देन रिपीट द सेम प्रोसेस 6830 m प्लस फोर्थ ईयर का वैल्यू, देन फिफ्थ ईयर का वैल्यू, एंड देन, अच्छा हमें फिफ्थ ईयर का ही वैल्यू चाहिए था, तो आप यहाँ पर करोगे तो आपके पास वैल्यू आ जाएगा 3.79, तो ये क्यूमुलेटिव प्रेजेंट वैल्यू फैक्टर आ गया 3790। तो ये आपका सब्सिक्वेंट कैश फ्लो और उसका प्रेजेंट वैल्यू यहाँ पर निकल के आ जाएगा, इट इज 12,000 इंटू 3.790, सो इसका वैल्यू आ गया 45,480, and then we are going to calculate the टर्मिनल कैश फ्लो। अब टर्मिनल कैश फ्लो में आप देखो आपके पास दो कैश फ्लो अराइज होगा, एक आपके पास अराइज हो जाएगा ये 20,000 का वर्किंग कैपिटल जो कि रिलीज होगा, तो ये 20,000 रुपीज रिलीज होने वाला है। इसके अलावा ये जो 50,000 रुपीज का आपने इन्वेस्टमेंट किया है इसका 20% आपको वापस से मिल जाएगा, सो दिस इज गोइंग टू बी 50,000 का 20%, सो आपका टोटल जो कैश फ्लोज आपको यहाँ पर मिलेगा दिस इज गोइंग टू बी 30,000, और 30,000 में आप फिर प्रेजेंट वैल्यू फैक्टर ले लोगे लास्ट ईयर का जो कि था 0.6209, सो 30,000 इंटू 0.6209, तो ये आ गया आपके पास पॉजिटिव 18,627। अब हम यहाँ पर चेक कर लेते हैं, 18,627 प्लस 45,480, 64,107 और माइनस 70,000, तो 5,893 रुपीज का नेगेटिव एनपीवी आपको मिल रहा है, एंड इन दिस केस व्हाट वी आर गोइंग टू से, वी विल से रिजेक्ट द प्रपोजल because the NPV is negative. Since the NPV is negative, reject the proposal. Then we have another question. Economic order quantity determines. So ये तो बहुत ही simple सा question है that order size जहाँ पर आपका minimum total cost आ जाए. तो this is there. So we have completed this entire paper in 1 hour 40 minutes. Almost इतना time हम लोगों ने लिया इस पूरे पेपर को कंप्लीट करने के लिए. आई होप दिस लेक्चर वाज हेल्पफुल फॉर यू ऑल, एंड ऑल द बेस्ट फॉर द एग्जाम. टेक केयर. बाय बाय.